How many sectors of real estate do you have exposure to in your portfolio? Because I know when it comes to real estate, at least in the equity world, most people just think in terms of one broad market of real estate, like one index fund, VNQ, Vanguard's Real Estate Index Fund, or a mutual fund that just gets exposure to real estate. But within that real estate world of equities, there are a bunch of different sectors. I found this chart by Visual Capitalist, which shows us a bunch of the different sectors. I don't know if it's all encompassing. There might be some sectors that aren't represented here, but shows us the major sectors and their performance over the past 10 years, each year. And we can see this chart right here. Going back to 2012, we can see all of the different categories. So there's infrastructure, lodging and resorts, residential, probably multifamily in that, diversified, mortgage. So this is going to be like mortgage security related instruments. Timber, office, healthcare, retail, self-storage, industrial. What is that? I think that's 11 of them, right? And back in 2012, timber had the highest return at 37.1%, while the lowest returner, the worst performer, was residential at 6.9%. But look at some of these other years here, where this one is self-storage, 40.7% return for 2015, and then down here, the bottom, lodging resorts, 24.4%. There is huge difference and a lack of correlation between these different sectors, right? Just as we see within sectors of the S&P 500, but I think these might be even more uncorrelated, more diverse. There's a higher difference or bigger difference between the highest returner and the smallest returner. So this is incredibly interesting. One thing we'll note here in 20 and 21, self-storage has been up there. I think self-storage facilities are very inflated in price. Industrial has been up there, and I'm kind of surprised industrial is not higher up on the list. I thought industrial would have been up above residential because industrial land is actually kind of declining in the amount of industrially zoned land available because a lot of that industrial zoned land is being converted to, multifamily. You see this a lot in Southern California. I noticed this a lot when I was out there, right? There would be like these hotel complexes in the middle of an industrial park. You're like, what the hell is going on here? And it didn't take very long for my economic brain to put this together. Okay, people are buying up industrial land, getting it rezoned, or maybe it doesn't even need to be rezoned for multifamily, and then they're building these very nice kind of Grant Cardone-esque apartment complexes, or maybe, I don't know, I generally think of Grant Cardone as being associated with luxury apartment complexes, but they're building like these luxury apartment complexes, so it's not hard to get these things approved, and I'm guessing they're obviously getting the land cheaper than they could for getting residential land in these areas. So anyways, yeah, I'm surprised to see industrial here even at number 3. I thought for sure it would have been number 1, but I guess self-storage is kind of like industrial. But yeah, how is commercial doing since, 2020 shut everything down with COVID? So many people aren't going to the office, and I guess by commercial I was referring to office. Office space right here, not a bad 2020. It didn't really have the worst. Retail got clobbered. But yeah, 2021, it hasn't been so good. I don't know, maybe 2022 will be the year of office space. So anyways, I took these numbers here and I put them into a spreadsheet and then a chart, right? And what I wanted to do was see if we could come up with either a momentum strategy or a mean reversion strategy among these sectors of real estate. I'm really big into momentum strategies. And not particularly, but momentum strategies work well when you've got a bunch of low correlated assets like we have here. So basically using this limited data we had, I took it and I looked at it and I said, hey, what was the top 3 best performers for the prior year? And then let's invest equal weight in them for the next year. And you can see the best performers are in yellow here. It's been changed around and sorted. And then I did the flip, like, hey, what if we invested in the worst performers for the prior year? And that's what we got here. The blue line representing the best 3 performers, investing in the best 3 performers from the prior year, so momentum. Worst 3 would be the red line, so it would be mean reversion. And we can see that ultimately the momentum strategy kind of eked out over the mean reversion strategy, but not by much, not by a ton. So the total return on a scale of 1 was 2.65 over this 10-year period. So in other words, if you invested $10,000 back here at, what would have been January 1, 2013, that would now be worth, or at the end of 2021 would now be worth 26,500. If we'd done it in the mean reversion or worst performing strategy, it would be worth 22,100 or 22,000, yeah, right, 22,147. So ultimately they were very close. And then if you were to put VNQ on here, VNQ I think would have been about a 2.38, so it would basically be right in the middle of them. So yeah, not really a huge premium by going with either one of these strategies, but I think that there's a lot more work that could be done behind them. You know, this is holding for a year in this momentum strategy, and I think that is too long to really kind of capture the upward momentum that it might have left, right? Because we always say that, you know, you can't invest looking on the rearview mirror. Well, momentum says that's wrong. It says if it's gone up over an intermediate term period, it's going to continue to go up for a little bit more, right? It might not go up forever, right? So maybe if it went up good for a year and you held it for 3 months, like a quarter, you could get a premium that way. Or maybe if you rotated these monthly into the top 3, there could be a premium that way. So I think this is really interesting, and this is something that I kind of want to dive deeper into. I really like, I don't like real estate. I want to like real estate as an asset class. You know, if you know me, I'm not a big real estate investor, but I always like looking into real estate because it just seems like everybody's printing money in real estate when, you know, really I do very well with equities, and I think the numbers behind it support that, you know, equities do outperform real estate. Broadly, granted, you can factor leverage and taxes into it, etc. Anyways, I really like equities, but I want to like real estate. So I look at kind of real estate, you know, as a physical holding, as these kind of crowdfunding platforms, etc. And I just can't like it, right? The numbers just don't line up. But this here, showing a group of uncorrelated sectors within real estate, I think shows potential for possibly some strategy development around momentum and all that, which is something I want to look forward into. What do you guys think about real estate? Do you invest in real estate? And if so, how? Let me know in the comments below.